Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Wednesday, 29th day of January 2014, and this is the Daily Report for Gold and Silver. We have a nice little rally underway in the precious metals markets, with gold trading up about $12 on the day, silver about 20 cents higher. As you can see, we're looking at a 120-minute chart of gold currently trading at $12.67, $12.68. The high today is $12.70, so we're just a few dollars off the high. The low is $12.50.40, and as I said, we're up about $12 on the day. Silver also showing a nice move today in terms of percentage gains. It's actually up over 1%, up 20 cents on the day. Low 19.42 and the high is 20.07. Current print is around 1976, 1977 on the day. As you can see, we are moving up towards the highs, currently trading now at about 1269, 1268 and change. The high right here just above 1270. We spoke about the fact over the last couple of days, as this market came under pressure, you can see this sizable move down. We actually did a fib retracement. And when we did the fib retracement, we came up with 1249 as our 61% retracement levels. When you look at this market and look at these lows that we got here, you can see that that effectively has been support in the market. We talked about the fact yesterday that what we would hope to see would be a bounce off of these lows back to new higher territory. And in fact, we got that following statements on the FOMC meeting that concluded today. And what we're seeing right now is really a return to some bullish sentiment in the market. We have the equities market continuing under pressure, and we now have the precious metals markets showing us some fairly nice upside moves here today. And these moves are pretty much almost completely taking away this downside that we saw as this market came down from these highs at about just above 1278, 1279 to move down to these points right in here. And now the market is sincerely moving higher. We're looking at a standard candlestick chart, and this chart is actually 240, so it's roughly double the length of the last chart that we looked at. And what really pops out when we look at this is the moves that have been coming in the market have been sizable price moves up in terms of period of time. These, of course, when we're looking at a 240, we're looking at a 4-hour block of time. Market, you can see, had a tremendous high and low on the last candle, but in terms of the open and close was fairly much closing in the middle, and it was very almost doji-like when you consider the highs and the lows and the small candle size. But on this particular candle, meaning over the last 4 hours of trading as we go into the close of the market today, we saw the market return. It opened roughly at 63, and it's quite evident that it looks like it wants to close up near the top. Now, what does that mean for our overall outlook on the markets itself? So in terms of the overall outlook on the marketplace itself, what we are seeing, I think most importantly, is the fact that it broke out last week and it broke out above that long-standing resistance line. That was short-lived because immediately at the beginning of the week on Monday, we saw it sell off, about $15 on the day, but it didn't go into the actual resistance line. It didn't trade back below, and that gave us a ray of hope, but it was a very, very small, very, very tight ray of hope that we had, because we really witnessed this market selling off pretty dramatically. Now, when we look at this particular chart, 720-minute chart, what sticks out and what becomes real apparent is we identified the support level at 49 at 1249, and we did that with a very, very short-term fib retracement. That fib retracement only covered this little area that you're looking at. But when we look at this particular chart, really what we see, at least in pretty clear-cut manner, is this area was definitely an area of resistance. It now appears as though it might in fact be an area of support, this band. And when I say band, what I mean by that is it's not an exact price as much as it is an area in the market that we're finding some sort of support. This is former resistance right here, and now it appears as though it's going to be support. Now, our next real level that we want to see if this market continues higher, as we talked about the other day, is this 1282. That's going to be our next real level, and you can see that this top is falling just below it. We've got these series of tops here, but these tops are above this last series of highs that we got before the market traded lower, this being the second time, or our double bottom, this being the second part of our double bottom right here. Of course, you can't see the double bottom really unless we go ahead and compress a chart, and we would have to compress it as such. And now you can see the double bottom that we talked about right here and then right here. And the key right now is the fact that when we look at this long-standing resistance line, now this is not the long-standing, this is the resistance line that's drawn simply from the last top, this being 1435, and that came directly, this was that one big rally that we had in 2013. But if we look at the long-term resistance charts, or resistance line, let's go ahead and pull that chart up. And of course, I've blown it up considerably, but here's our long-standing resistance line. This really begins from 1800 and comes all the way down. Here is our breakout candle that we had, and that was actually our signal to enter the market from the long side. As I said, that was to be pretty short-lived because the following, this is our daily chart, of course, but on our following 3 days, we had the market a little bit higher. This was Friday. Monday, we had that tremendous sell-off. Market comes down, and then just yesterday, we had slightly lower pricing, but we have been able to kind of push off of that and move to higher ground. And so when we look at this particular chart, we'll go ahead and compress it a little bit so you get an idea of the resistance line in its entirety. Really, what you can see is that we've got this cluster right now, but the cluster itself, I believe, is building a base. I believe that what we saw the last couple of days was backfill, and we are now starting to push to higher prices. You can definitely see that on a daily chart. However, on the weekly chart, it's a little bit different, because on the weekly chart, let's go ahead and pull that up. On the weekly chart, the underlying characteristic of this marketplace this week has been a down week, so it has been a red candle. But as we now move to higher ground, you can see it is slightly red, but just by a tick, it is very doji-like. So where it opened, this is only Wednesday, so if we have follow-through over the next couple of days as we go into the weekend, of course, what that says to us is it's going to turn green. But the key is that this open and close, the trading range itself has remained above what I believe to be a pretty critical area. Critical because it's such a long-standing resistance line. It's been in play for well over a year. Now, one of the things that we can look at is the equities markets, and the equities markets has been under dramatic pressure. And you can see that on this weekly chart. What we talked about last week were these clusters of highs that we had over the period of almost a month on a weekly chart. The market has definitely come down, and the real question is, we've seen this before. We have seen this market retrace on its upward path, so the fact that it's now retracing again doesn't surprise me that much. What I would look for is each time this market, the equities markets, the U.S. equities markets, has had a small retracement. It's taken approximately 4 weeks. I'm just simply looking at the candle size. So about a 1 month retracement, and that would be followed by a couple of months of higher prices. Here it was about equal, maybe a month, then a month down. Here we had a spike and then a little bit of a sideways action. And then once again, we came up and we formed this real top up here. So what is the equities markets going to do? I think that we're going to see a normal retracement. It might last another week or two, but I am not looking for the market to really turn on its head. I'm not looking for that 7 or 10% correction like many analysts out there are calling for. I just don't think it's warranted at this point. And then finally for silver. Silver is again above 1958. That's a pretty critical area. This is the Japanese average. You can see how it's been clustered Over the last month in trading, you've had these small bodied candles. That's in Japanese average format. And even if we convert that, of course, to a standard candlestick, we've had these last couple of weeks been down weeks, and they are still down weeks. Now, even when we convert this to a daily, what we're getting is that cluster again, and that's where this daily is really showing us something. And this cluster can be defined really by these series of highs that we're getting. And these series of highs are coming in just at around 2050, and then these series of lows, and these series of lows are coming in at around 1925, right in that area. But it seems to be absolutely categorically range-bound between these two prices. We have stood aside. We are still active in our position in gold, but we did not take a position in silver. I just didn't think it warranted going and putting that on, because we've had this really defined tight range, and a tight range is not conducive for a long-term trend trader, and we do try to catch long-term trends. That's always been my outlook here. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update and